The challenge, especially for the regulatory authorities, to ensure that they are on top of the game, all the time. When I said, for example, we were the best in terms of Tier 1 capital among us was not up to number 10 last year. Take for example the Standard Banking Group in South Africa. The Tier 1 capital was 13 billion. Even if you achieve this 500 billion naira that we're asking for, the best would be about 300 or maybe 400 at the current exchange rate, 400 million or 380 something million at the current exchange rate. So that is the issue. Now, of course, the right thing is being done, from the time, like I said, 20 years ago, when the initial policy of recapitalization came in. It was the right move, because without that, you can imagine what would have been the market in the Nigerian sense. Like the last speaker said, already some Nigerian banks are making inroads into various countries, and it was all thanks to these policies that have been made earlier. So these policies should be sustained, but then, we have to always be on the lookout for some other things. Like, for example, when the 2004, 2005 initiative was done, I, in the university, was asked to make a seminar, in 2006, to present a seminar on it, because maybe because they saw that I have had some near 20 years experience in banking. And I did that. And subsequently, I did a paper, on intended and unintended consequences of the consolidation. Now, the same thing is also probably have to happen now, because we have to look at what are the intended implications. What do they want to achieve? What do we want to achieve? I mean, will this be enough? I mean, it's just 500 billion naira. Will it be enough? But perhaps it's a step in the right direction. We perhaps don't have to wait for another 20 years, to re-engineer and encourage our system. But I also like the fact that these banks are growing on their own. They are actually growing, and of course they are using their retained capital, in addition to any other additional capital, to grow. And I think that growth should be encouraged, and then the regulatory authorities should be on the lookout to ensure that we do the right thing. Let me give you some example of some of the consequences that happened the last time, and which we should avoid this time around. When the banks all of a sudden had bigger capitals, they now decided that they didn't want to deal with small customers per se, the SMEs and all that, because the banks were so big, they felt they were so big away. Anybody then requesting any facility of 5 million, something is looked at somehow, and then the approval limits of all facilities, are now centralized, because of bigger money. So we are now likely going to see a lot more of that now, that all powers to lend will be concentrated in the head office, more or less. This is what is happening even right now. So you can imagine with higher capital, we are likely going to see that. Very few people. So you now find that on the average, the bankers that you see day to day, they don't even have knowledge of credit, in the real sense of it. And then the small scale businesses, which are the engine rooms of economics, are not taken care of, not to talk of farming, not to talk of mining, not to talk of, and then we now saw another thing that happened. The banks now tend to move, in unison. Every sector that starts to do well, every bank will move that way. When petroleum, for example, is doing well, especially importation, every bank was giving out huge credits to those sectors. So a lot of work needs to be done, especially by the central bank and the NDIC, to ensure that we don't have concentration, risk concentration, where that is a situation whereby a lot of facilities are given to one sector or to one area that appears to be doing very well. We need to get our national interests, to take it into consideration. We need to develop our economy. Now with the African Free Trade, the African Trade, AFCTA, African Free Trade Association that we have entered, there are opportunities for export to African countries. Let us cash on it. Let us boost our economy. Let us use it to boost our economy. Again, another consequence that happened with the last time, consolidation, was that at a point, banks decided to say, okay, will not accept credit. Will not accept securities, that is landed property, given out as collateral, to secure loan, only except if it comes from Lagos, Abuja, and Port Harcourt. This is what happened. This is probably what is still happening. So are we now likely going to see that continuing, now that the banks are going to grow bigger? I mean, all the monies of this country are mopped up and taken to one place, Now, money from Kaduna, from Lagos, from Calabar, from everywhere moves into Lagos, for example. Then the decision to lend is in Lagos. And then loans are given only to companies within Lagos, within Port Harcourt, within Abuja, or businesses within Lagos, within Port Harcourt, within Abuja. What happens to the rest of the country? These are some of the consequences that we may see if the regulatory authorities do not do what they are supposed to do. Thank you.